The ECB supervisory priorities are the key focus areas set by the European Central Bank to address the most significant risks and vulnerabilities facing European banks over the next 3 years. The priorities matter because they guide supervisory actions, they promote consistency and effectiveness across the euro area, and help ensure that banks remain stable, resilient, and able to support the economy amid evolving risks.
Moving to the risks to banks, I mean, the way we think about risk is looking at the potential external triggers and then which are the vulnerabilities in banks which can then affect our banking sector. So starting from the business model, I mean, here we are coming from a few years of very high profitability. Moving to capital adequacy, I think if you look at the chart on the right, it's very clear that there has been steady progress over the past 10 years, looking not only at the capital ratios, but also at the amount of capital in the banking sector. Of course, in the last cycles, the increase in profitability has been helpful because notwithstanding the dividend policies of the banks, there has been also a significant amount of capital stayed in the banks, which is a positive development. And we wait for the full implementation of the Basel Accord as a further element for strengthening the capital position and the resilience of the banks. Moving to operational resilience and perhaps also accelerating slightly because I think my time is almost over. If you look at cyber, this is one of our main concerns for the banking sector. Because if you look at the SREP scores over the past few years, operational resilience is where we feel there are more vulnerabilities in banks, and also because, to be fair, is where the banks, the authorities, they need to learn more on how to respond to this kind of attacks. I mean, on digitalization is a bit of follow-up on operational resilience. There is one element which is several banks are using digitalization as a way for improving business model, for working on the cost structure. It is important to have the right investments in digitalization, and it's also important to have the strategy and the internal awareness of the risks. And this is relevant in general, but if you look at the evolution and the increasing use of artificial intelligence, this is also where we need to learn together with the banks the best way forward. I mean, so far, what we understand is that banks are using artificial intelligence mostly for streamlining, making more efficient some basic processes. But let's say when we move from this sort of office automation use to decision making is where I think the safeguards should be stronger.
Of course, we get a lot of help from Swedbank regarding new regulations, and we also work intensively at the Savings Banks Association with these issues to help the smallest savings banks primarily. But of course, it is a huge challenge to absorb all these new regulations. And that doesn't mean that it is something wrong with the regulations. I think they are good. They are good for the banks. They are good for society. They are good for the environment, etc. But it is more about how much you can ask for a small institution to handle in a short time frame. Because I think that is most of the challenges right now, that there are an enormous amount, to put it that way, of regulations in many, many areas that has to be implemented in a very short time frame.
Internally, like to refer to the ECB's priorities as the 3 R's: resilience, remediation, and reinvention. And in my brief statement, I would like to cover the priorities of resilience and reinvention. I think as a general observation, and that's also something that the numbers that Mario just presented show, I think that the European banking system has actually shown quite remarkable resilience to external shocks. First of all, we are hearing good feedback and making good experiences on performing ECB-style self-assessments, so as to mimic the JST expectations. Then, of course, like I said, make use of the ECB reports and other documents that help banks to understand the ECB expectations. But most importantly, the last point is really to, I think, make use of supervisory dialogue whenever possible and to engage with your JSTs and your NCAs.